G'day guys, how's it going? So this video that I'm bringing to you today is on trending bias or market bias. You'll hear a lot about things like confirmation bias, recency bias, hindsight bias in trading. These are sort of like negative habits or traits that will impact your trading. Trend bias is a little bit different. It's kind of like a filter you use to make decisions, right? So I see it as a way of assessing where the market is at, where you think it's going to go going forward, and then you use that information to base your decision on, right? It's that filter you run it through. So I have three different types of bias. I have bullish, I have bearish, and I have consolidating, depending on what the market is doing. Van Tharp, he has 6. So he has volatile bull, quiet bull, volatile sideways, quiet bear, and volatile bear. So he has 6 different market conditions or market types that he uses to give himself a bias and make decisions, or even implement different strategies based on that. So what I mean there is there's this concept of a holy grail strategy, right? Which is a strategy that works in all markets all the time. You never have to tweak it. It's just a perfect system. Van Tharp, who is widely regarded to be a great trading coach, especially in terms of psychology, doesn't believe the holy grail systems exist, right? Personally, like, I never say never. It might be out there, but in my experience, it's much easier to find different systems that work for different market conditions and just apply those when the market is in those conditions than to try and find one that works for everything. Now, your system doesn't have to be radically different. My system is pretty similar no matter what market we're in, but I just tweak it a little bit in terms of what I do, right? In terms of like my entries and exits, and even how I take profit at times. So I'll show you guys that in a bit. I'll explain it as I explain how I find my bias. So personally, I trade the 4 hours mostly, but I get my bias from the daily market structure, right? I like to get my bias from a higher time frame than the time I trade, because in my opinion, it tells you more about the overall state of the market, right? It's a bigger picture view. And so I try and align myself with that bigger picture view. So actually, I also look at the weeklies just to get an idea of what price is doing, where I think it might head. But it's the daily market structure that is really my bias giver, I suppose. So let's say that we are back here and we're looking at market structure. We have a lower low, then a lower high, if we're looking compared to that high, but then we have a higher low and a higher high. So this would get my bias to be bullish, right? We've had higher low, higher high, higher low. I'd be feeling pretty bullish here. When my bias is bullish, I do not short. I only look for longs, right? Do not short at all. And then we stay bullish for quite some time. So you can see here, higher high, higher low, higher high. I was just looking for longs this whole time, looking for longs. All of a sudden we got, that was really bad. Hang on, let's get rid of that. All of a sudden we got a lower low and my bias changed. Didn't flip. I didn't turn bearish straight away, but my bias was no longer bullish. It was more of a consolidating bias, and that meant that I was happy to take shorts, right? We got a lower high, we got a lower low, lower high. This is sort of, I just consider that the one lower low really. And now we are making an equal high, or if we keep pushing up, we might make a higher high, right? So from, let's say that lower low, that lower high, my bias was bearish through there. In fact, really, if I'm being completely honest, it was bearish pretty much up until this recent move up. So it's probably bearish through there, right? But now my bias is consolidating because we are sort of in this range and we are just, well, I mean, it's decision time, but we're in this range. So my bias is consolidating. I'm happy to take longs or shorts at the moment. Let me just get rid of all those drawings. So that's how I get my bias, right? I use daily market structure to get my bias. You might get it some other way. So one of the ways that I know of is using the 200 moving average. So Paul Tudor Jones, who is a hedge fund manager in the States, really successful guy, he uses the 200 moving average to get his bias. And how he does it, if price is above the 200 MA, he only looks for longs. If it's below, he only looks for shorts or to reduce exposure on long positions, right? So it's really simple. And in my opinion, you want your way to get a bias to be simple. Sorry, let me just get rid of those. Another way that you might get your bias is something like a golden cross, right? So in this case, it's the 50 EMA crossing the 200 EMA. And you might go, okay, when the 50 is above the 200, I look for longs. When it's below, I look for shorts. You just want something that you can sort of quickly look at the market, get your bias, and then go and use that when you're trading and when you're making decisions after that. So there's another way that I have been looking at getting a bias in my scalping strategy is using the MACD, right? There's so many different ways you can get a bias. You'll find what works for you. And if you're not sure, I'm a big fan of market structure. So I've spoken about that. Sorry, guys. Oh yeah. So why have a bias, right? Because it's one thing to show you what it is. Why have a bias? This is really heavily linked to my low risk, high opportunity video that I did last week. So there will be a lot of overlap here, but I sort of went more in detail there. And this sort of shows why I think having a bias is really important. So what it really boils down to is, in my opinion, it has the potential to improve your risk to reward and to increase your win rate. Those two things are, in my opinion, the most important numbers in trading, right? If you can tweak one of those and make it better, you'll become more profitable. If you can tweak them both, you are doing really well on your way to becoming more profitable. So how a bias improves your risk to reward. So let's say that we were in my bullish bias from here, right? Because we were looking at before, I think it was about here that we turned bullish. Let's say we caught this long. We use previous market structure for our stop. So we got about a 13% stop. We rode that up to the top. That was a 9.4 to 1 trade, right? And at the time, because our bias was bullish, we should have only been looking for longs. Now, let's say you didn't have a bullish bias there, or you were happy to take shorts even when you had a bullish bias, because you might not cut out shorts. You might go, all right, I'll take longs for 1% risk and I'll take shorts for 0.5% risk when my bias is bullish, right? You'll figure out what works for you. This is just what works for me. But let's say that you took a short from here and you did it for 1%, and you wouldn't know where to put your stop because you didn't have previous structure to base it off. So sorry, I'm saying you're shorting from there, but I just don't want to put the risk reward tools over each other so it gets messy. So let's say you use a 13% stop, the same as on your long. If you had targeted and you had nailed the very bottom of that, you would have got about a 2.2 to 1 trade. So you can see the risk reward is so much higher on longs in a bullish market, right? So that's how it improves your risk to reward. How it improves, oh, I got rid of the wrong thing. How it improves your win rate, we can show by, if we look at, it was about here that we turned bullish, and it was here that we turned bearish, right? Or didn't turn bearish, but we lost our bullish bias. So that was about 234 days, all right? Over the course of that 234 days, the market was moving down for 20 days, 9 days, so let's call that 30 days. Oh, what's going on there? 30 days, 18, or that's actually less, so 14. So what are we at? 44 days and 13 days, so 57. 57, that's about 25% of the time, right? We'll round up. 57 on 235. I'm going to go with 60 on 240. So that's about 25% of the time that the market was moving down. What that kind of means is you could have woken up each day, flipped a coin, and if your bias was bullish, and that meant you only took longs, let's say that you flipped that coin, and if it came up heads, you went long. If it came up tails, you didn't trade for the day. Just based on how much time the market spent moving up compared to down, you would have had a 75% win rate whenever you had heads, right? So you would have been profitable potentially off that strategy. You might have only got heads when the market's going down, right? That's one of the funny things about probability. But the odds would have been in your favor by only taking longs, even if you didn't worry about entry conditions. You just flipped a coin, right? Because the market spent more time moving up than it did moving down, and it, especially in terms of the distance it moved up compared to the distance it moved down, having a bullish bias would have really, most likely would have really improved your win rate through that time period. So that, in my opinion, is why a bias is so, maybe not important, you don't have to have one, but why it's such a useful tool to improve your trading, improve your profitability. I know for sure that when I started implementing a bias and I started implementing the low risk, high opportunity mindset that I spoke about in the last video, and they're really intrinsically linked. But when I started using those two things, my trading got a lot better, a lot faster. So I hope that this can sort of help you guys, one, see why having a bias is important. Two, you might go and apply a bias to your trading and find you become more profitable. If so, let me know. I love hearing the success stories. But yeah, I hope you guys got something out of that video. It's a ripper day outside, so I'm gonna go work on my van. I'm really excited for it. I hope you guys are doing some cool stuff too. Hope you're kicking goals, and happy trading. I'll talk to you guys soon.